Good morning, everybody. My name is Jay Martin. I am an investor and the CEO of Cambridge House International. Now, today what we're doing here on the YouTube channel is hosting the Nuclear Energy Investment Summit, where I will be sitting down with a handful of personalities from the uranium and the nuclear space in order to get a better idea of how I should be positioned, how I should be allocating capital in this sector. Now, for the last decade, I've been building investment conferences throughout North America focused on the small cap sector. And as a consequence of that, I've got an amazing Rolodex of gurus and money managers, fund managers, company CEOs, and entrepreneurs who have consistently outperformed the market. Now, what I do here on this YouTube channel is interview them. When I get excited about an idea, I do two things. Right now, I'm very bullish and curious on uranium. And so what I'm doing is, number one, identifying the top entrepreneurs in the space. Anybody who watches my material knows I'm a very people-focused investor. I choose people over everything every single time in the small cap sector. And I think everybody should. When it comes to early stage investing, it's in my opinion that you're rarely investing in the product or the project or even the potential of an industry to move. You're really investing in the judgment and the decision making of one or two individuals who are going to be having that adventure with your money. So you better trust them and get to know them. So number one is identify those top entrepreneurs. Number two is stress test your bullish sentiment against the macro trends, right? We all have our blind spots and I have mine. And so I want to find what those are because I don't enjoy investing into a headwind, not if I can avoid it. So what we're doing today is diving deep into the uranium sector. I've identified a handful of personalities that I know I can pull information from their brain that's going to be valuable to me and my portfolio. I'm also sitting down with a handful of entrepreneurs in the space, some unique early stage investment opportunities. So over the next few hours, I'll be joined one-on-one by Irwin, the founder, president, and CIO of Rosseau Asset Management, the top performing hedge fund in the natural resource business. I'll be joined by Kristin, Zaitz, and Hoff, co-founders of an organization called Mothers for Nuclear. Now, this is a group that was founded by a few sort of eco-conscious engineers who were initially opposed to nuclear energy, but for renewable. And over the course of their education and building this organization, they discovered nuclear is the key ingredient and the missing piece in most of the renewable energy conversations that occur today. So I'm excited to sit down with them. They've recently got a ton of press coverage in the New Yorker and a variety of other publications, and they join me today on the show. I'll also be joined by Huhn, founder of Uraniuminsider. In addition, Scott Melbye, who is arguably the most intelligent individual in the uranium and nuclear space. That's my opinion. He's also the CEO of Uranium Royalty Corp. I'll be joined by Amir Adnani, the CEO of Uranium Energy Corporation, and by Jim Paterson, CEO of ValOre Metals, who you may not think of as the uranium company because they're so focused on their platinum projects, but I'll get into why I think Jim and ValOre are the big sleeper in the uranium market. So we'll talk about that. So enjoy. Thank you for tuning in. I'll be hanging out in the live chat. Drop me a line, say hi. My next guest is Irwin, the founder, president, and CIO of Rosseau Asset Management, the top performing hedge fund in the natural resource business. What I love to do is introduce the right people to the right people, assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today. Please give my panel a round of applause. Welcome. Okay guys, Jay Martin here, CEO of Cambridge House, and I'm right now joined by Irwin, the founder of Rosseau Asset Management, one of the top performing hedge funds in the resource sector. Warren, it's great to have you on.
Well, thanks for having me, Jay. Appreciate it.
Yeah, no, I'm excited. There's so many things I want to talk to you about. I want to focus this conversation on uranium, and but to open up, I followed you on Twitter. My first question for you is, what's going on with our Prime Minister?
Oh, yeah, it's just, I'm stating that pretty much the obvious things that the Canadian press does not want to cover, which is there have been no signs of his wife around. There's been rumors of the separation, which I picked up many, many months ago. She obtained COVID, and somehow that highly contagious disease didn't get to him. So obviously, they're not spending a fair amount of time together. And just recently, I picked up that she'll be filing for divorce, but that's just, of course, at this stage, just a rumor. But what blows me away is there's not a single thing being covered in the Canadian press about this. And the implications for this is going through a divorce is very traumatic for both parties involved. And if he is going through something that traumatic during a very crucial time in our country's history where we're trying to do a successful rollout of the COVID vaccine, And that's not being handled well, and it's pretty obvious it is not being handled well. It's I don't think it's fair that the Canadian population is not made aware of some of the personal issues he's going through at this present time, and we're all paying the price because the rest of the world is getting vaccinated and we're not, and it's an embarrassment and it's a travesty. And whereas the Canadian press, nobody's covering any of this nonsense. So I just thought I'd put it out there just so that the people who follow me on Twitter could know that, I state the obvious. And I felt it important that the people who follow me on Twitter were aware of what I was picking up, and that may explain what's going on in Ottawa right now.
Interesting. Yeah. Okay. I won't dwell on that any longer, but had to ask because that was the first that I had seen of that news, and it was on your Twitter feed. Okay. Now, where I want to go to next is the uranium sector. Again, just catching on to some of your tweets, Warren. You've been talking about, call it a changing of the guard in the uranium sector, specifically talking about the Cameco, alluded to an acquisition of NextGen. You think that's off the table now with their recent news. Can you elaborate on that for me?
Well, I've followed NextGen for probably 5 or 6 years. I was one of the first guys on the ground that realized that this could be a substantial new discovery. And it's turned out better than I could ever imagine. It's the biggest and richest new uranium discovery in the world. And it'll be a tremendous producer of uranium. It'll produce just under 30 million pounds of uranium a year into a market that is, around 180 million pounds. It's almost without precedence that you can have one mine producing that much of the market of any commodity, whether that be copper or silver or gold. It doesn't happen in those commodities, but in uranium, you'll have a producer producing almost 30 million pounds into a market that has consumption of around 180 million pounds. That's pretty extraordinary. And it's NextGen has really been a dream come true for me and many of the investors who got in early with it. So, I've obviously talked to Cameco about this when I run into Cameco executives, and I say, listen, why don't you take a swing at NextGen? I said, your properties are old and tired and beat up, and we have this tremendous discovery. And, they've been missing the boat for quite a number of years on this. They had many, many opportunities to buy it. And now what's happened is we have a situation where it's very clear that NextGen has the capabilities, the expertise, and the financial clout to put this into production, and they're doing it. And so come, let's say 10 years from now, or not even that far, 5 years from now, you'll have a situation where Cameco will be about 5 years from the end of life of Cigar Lake. Again, if they put that back into production, so that's one of their two major projects. And McArthur River has been operating since around, I believe, 2000. And, both of their mines are extremely complicated to mine, unlike Arrow. And I've spoken about this before. Arrow is a hard rock mine with uranium in it. The ore is so rich, it's quite a small footprint. You saw recently from the feasibility study that there's some tremendous aspects of it, like how they're getting rid of they're dealing with their tailings issues in the most environmentally friendly way and things like that. But so you look at Cameco, the industry leader, and they've got two tired old mines. One's going to be out of production at the end of this decade, and the other one has been shut down right now. It is the same as many old mines in that the easy stuff is mined first, and the difficult stuff is mined last. And McArthur is a difficult mine, so is Cigar. Cigar needs jet boring. McArthur River needs, other techniques to deal with the high-grade uranium. Both mines have flooded before and shut down production completely. That's not something that could happen at NextGen because you're in hard rock. You're not in sand that needs to be frozen. And so there's so many very difficult mining techniques that are used in these two mines owned by Cameco. And again, one of them is getting near the end of its life. Cigar will be end of the end of this decade. McArthur is getting old, which means the toughest sectors are left to mine. It just happens with any mine. As it gets older, you take the good stuff out first, and the trickier stuff to get is later. So in the end of this decade, they'll have one mine. It'll be McArthur River, and it'll be old, and it'll be tough to mine it, and it'll get tougher every year. Mm-hmm. And then you've got this beautiful new gem of NextGen, which will be, my recollection from the report is around, 4 years or so, with some slippage, maybe 5 years from now, will be producing a massive amount of the world's uranium. And there's Cameco will be just slipping every year as their mines get older and older and more tired and more tired.
Right. So then if you're running NextGen at this point, we're seeing a lot of indicators of a budding uranium market. If you look at all the cash Biden's going to throw at renewable energy, factor nuclear into that, it looks to be, could be sustainable. So all that to say, do you think the organic growth model is therefore more attractive than an acquisition at this point?
Oh, well, the issue we have here is we're at the, if you're looking at the supply demand fundamentals like I am and a lot of people are, and you'll notice on a lot of, there's a lot of information out there about how good the supply demand fundamentals look for the producers of uranium going forward. There's going to be two big drivers to make money, both in terms of let's say NextGen. And the reason I'm choosing NextGen versus any of the other handful of uranium producers is it's I've been in it for a long time. I know it very well. It's a top quality project. The stock's liquid, good management. It's in the Athabasca Basin, the best mining jurisdiction in the world. There's a lot of really, really good things. So if this uranium market that we're all hoping is going to happen does not happen, they'll be in a great position. Great things will happen. They'll move into production. They'll make money at current levels and everything will be fine. Whereas if you took, as an investor, a retail investor, let's say you got a little bit more aggressive at this stage, there's more risk because if the uranium market doesn't happen, you may not fare quite as well. So there's two big drivers for, let's say, NextGen and other players in the uranium market. The first is, I was around, like many of us old timers back in the day when uranium ran real hard from around the 2003, 2004 to 2007 range. It went from around the $10 level to around $140. Massive move. Names like Paladin. Paladin was the big winner last cycle. It went up 160 times in value. It went from a few pennies a share to I think around $7 or $8. So that is possible in a good uranium market, and things are setting themselves up to be very, very good. So I think the biggest upside for a stock like NextGen is just a good uranium market. Whereas in a potential acquisition by a large mining company would be sort of icing on the cake of that. The risk we have at NextGen is if we're bought out by a multi-commodity or a major company, let's say one of the big mining companies. I don't want to drop names, but let's say one of them saw the economics of NextGen, say we want to be a world leader in uranium production, and they bought us. And if they didn't give us cash and they gave us some shares, we'd be stuck with a much more diversified miner. Whereas in theory, you'd want to actually play the uranium space real hard, because these stocks can go up many, many fold. And in the right scenario, NextGen in their feasibility study, it will generate roughly $1 billion a year cash flow. My recollection is around a $50 uranium price. Well, you start playing around with that uranium figure and it starts really playing with their cash flow. So the main driver for the uranium space will be an eventual move in the spot uranium price, which will impact what the term market where most of these producers sell into. And then the icing on the cake would be an acquisition by a player who wants to get into the uranium space would be the next move. Yeah.
Got it. Okay. And so, what we try to do on this show, Warren, is I guess, spot where the puck's going to be. My audience is retail investors, just like I am. We're looking for, highly speculative opportunities and more conservative plays in the commodity sector. Yeah. What could prove us wrong in the uranium market right now? Because supply demand fundamentals are very strong, right? But there's been a prolonged depression in the price. What could prove us wrong in our outlook?
Well, I don't see a scenario where there will be much drop in the price of spot. What could prove us wrong there, prove me wrong there, would be another, 300 million pounds of uranium coming off some sort of secret stockpile that ABC or XYZ country had, right? Yeah. Hitting the market, that could impact spot. and the utilities will say, listen, we're not entering into any term contracts or $50 or $60 while we could buy a few £100 million for the next few years off of XYZ or ABC country that happened to stockpile a fair amount of uranium. Now, the issue, of course, with predicting uranium is I've been early on it. Let's hope I'm early. And Cameco has made some thoughts that they thought the uranium market would turn around a few years ago too. So a lot of people have been expecting this turn some years ago, but there seems to be a supply of a secondary product that just keeps hitting the market, keeping a damper on things. So what could prove us wrong would be continued secondary supply. And there is speculation that it's gradually tapering away. So that would be one risk. The other risk, obviously, with the nuclear industry in general is if another major nuclear accident like Fukushima, which would shut down a lot of reactors and make the space put the space in a bad way and make it out of favor. But for right now, what's happening is there seems to be a reasonable amount of secondary supply hitting the market. It's not overwhelming the market. The market's sopping it up quite nicely. The production scenario is absolutely crazy because, Cameco is the number 2 producer in the world behind Kazatomprom, and their 2 major mines, which are pretty much all their production, are shut down. Like, I name a commodity in the world where the second largest producer is not producing any of the commodity, and it's pretty outrageous. And then the fact that you're producing around the consumption's around 180 million pounds a year, and production's, let's say, it's a moving target, but let's say 120. So, and that gap is made up by secondary supply. So,
right.
That the market is very, very interesting that way, and that's why it can be at times quite difficult to predict. But one thing I've learned from the mining business, if you go decades without adequate investment in new mines, eventually that'll come around and bite you. And I believe we're narrowing in on the area where we're going to get bitten. And when you combine that with a steady growth of consumption for uranium, because China has been building out nuclear power plants for years. There's about 440 nuclear plants in existence, and China's building it. And right now in the world, there's about 50 under construction, lots more planned. So, and what's interesting, I mentioned to people too, is the added benefit there is when you start a new nuclear power plant, it'll require, 2, 3, depending on the reactor, 2-3 year supply just to stock it up initially to get started, like to fill the gas tank sort of thing.
Okay.
And these new nuclear reactors that are being built, they are larger than the current established base of uranium of reactors. So the 440, I did some work some years ago there, and it took a look at their average size versus the average size of the ones being built. And the new ones are being built, they'll use more. And plus, when you start a new one, you need to gas it up. So you've got that going on. And then you've got, the U.S. has figured out that you can't power a new electric economy with fairy dust.
Yeah.
And, wind and solar is fantasy because we don't have the battery we don't have the batteries to store the energy. And then, we all know what it's like, especially living here in Canada, what it's like to be under clouds for 2 weeks where you're just not getting any solar and the wind's not moving. So what do? You need 2 weeks supply of energy saved. And what happens if it goes 3 weeks? Well, the amount of battery power you need just to store energy for a large city is incredible. So there is a place for nuclear reactors, and I'm really excited about the next generation nuclear reactors, not unlike Bill Gates. I've seen what's going on with the new Gen 4 reactors.
Yeah.
My favorite, these small modular reactors are amazing. The key driver for them is when you modularize something, which is not the case today, you standardize the products and you start standardizing parts and engineering. And the main cost of nuclear power is the capital cost. It's not the uranium itself. It's told many times, like when you look at a natural gas-fired plant, natural gas represents the majority of the production costs, whereas in nuclear, I'm told it's sort of like sub 5% of the cost of your nuclear power comes from the cost of uranium. It's mostly the capital cost and the cost of the infrastructure that is the real cost of that.
Got it. Okay, yeah. And I was wondering about barriers in that regard. There aren't really any from a technological standpoint, right? It's very efficient energy. Energy output per square foot is favorable, zero carbon emissions, et cetera. But there's a lot of debate at a policy level, right? And a lot of stigma still. Yep. And there's an interesting debate even among like renewable energy advocates about whether or not they should be pro-nuclear. Right. And so talk to me about that a little bit, because that's the other part of the problem, right? Is how do we get public in favor? How do you change policy in favor, et cetera?
Yeah, well, the first thing is, from my undergraduate degree is in mathematics. Just work out the math. We cannot power the earth with fantasy. We can't power it with wind and solar. It's just not doable. Germany tried it. It's not doable. Look what's going on in Texas. If Texas had a couple more nukes, they would have never had any of the problems. If I just ask a Texan right now, how is it like to sit there at below zero temperatures, freezing to death? Like, sure. It's, we're getting to the point where the rubber's hitting the road. We can't talk about fairy dust anymore. We all know we can't count on wind and solar, and we don't have the battery power. We don't have the battery capacity to store it. So we need solid baseline and baseload power. And we've dammed up all our rivers, another great non-CO2 generating source of electricity. So unless we're ready to rely on coal or natural gas, which are both, fossil fuels, emission CO2, nuclear is our only option. The great thing about it is, despite, idiots like Greenpeace being against nuclear power for the past half century and setting back nuclear power research for half a century, there have been people that have been sticking it through. And some of the new designs are pretty exciting. And to me as a consumer, I hate seeing these big wind farms destroying the landscape and killing birds, and they have a short life and you have to throw them in these big landfills once they're all done. It's just terrible. So the new molten salt reactors, for instance, they're small, generate a lot of power. The fuel is already in liquid form, so it can't melt down. There's fail-safe, so if the grid, if the power going towards the reactor to sustain the reaction is cut, the process stops. So that's, I think, what we'll need to generate more acceptance among the population.
Right.
And the sad part of it is guys like Greenpeace have been protesting nuclear since the 70s. So a lot of this research has been delayed. Can you imagine where we would be today had we been pro-nuclear for the last 50 years? We wouldn't even be having this conversation. And for the last 50 years, thanks to the environmental groups, we've been burning coal, which has been harming the health and killing people around the world.
So talk to me about that, because you touched on this. We chatted yesterday, and you talked about the conflict at Greenpeace with the coal industry and why they're so opposed to nuclear.
Yeah, Greenpeace, in my opinion, is a massive travesty, what they've done to the environment globally here. They were anti-nukes and very proud of it. They're proud of it till today, that they're anti-nuclear. And so after 3 Mile Island, they jumped all over and they stopped the biggest nuclear renaissance in the world, which was happening back in the 1970s, the massive nuclear build-out. When they stopped that, following a reasonably minor accident at 3 Mile Island, they shouted to the heavens and demonized the nuclear power. And there's people who don't buy that, which, like right now, the Chinese are on the biggest build-out. They're sharp. They know they could do the math. They know that nuclear power is the safest power out there, despite, the well-publicized accidents that have happened. Yeah, there have been a number of, even dams that have breached and killed tons of people in villages downstream. So nuclear power has been the safest form of baseload and massive amounts of energy. And we've been cranking out in the U.S. a significant amount of their power, I believe is on the 25% level, for the past half century, accident-free, safe, non-CO2 generating power. So what Greenpeace has done by allowing coal-fired power to exist in the U.S. and North America and elsewhere for the past half century, that cost to the environment has been massive. And now we're playing massive catch-up here. to get nuclear back on track with some of these new technologies. And it's really a travesty. And when you look at who was financing these environmental groups back in the 70s, you do a little bit of digging and you'll find it was the coal industry. They knew what was happening. They were being displaced by nuclear power. People wouldn't be buying thermal coal to put in these nuclear power plants. But I think the world has figured that all out now. Took a half a century. But let's get these small modular reactors that are fail-safe out in use, get them going, and get people comfortable with them. Right. And it'll be 1,000 times better than watching these terrible windmills just blight our landscape and take up acres and acres of land for solar. When solar, of course, can you imagine working in Vancouver during a typical winter? I remember as a kid living in Vancouver, and it rained every single day for a month. Like, it was, solar just doesn't work. Yeah.
I think that's why we're so dependent on hydropower out west. Okay, now, so we touched on that. So I'm with you. The only environmental argument that I hear is the spent rod storage. Yeah. So talk to me about that, Warren.
Well, they blow everything out of proportion. There's 3 ideas I want to share with you about this. One is, let's talk about the magnitude of the numbers I've seen is, all the nuclear waste in the entire world, despite what, all these environmental people are freaking out about, will cover basically a football field about, 10 feet high. That's it. The entire world's spent nuclear fuel. I can assure you, for the power that Greenpeace has, promoted for the last half century, which is by being not nuclear, you're being pro-coal, and they were pro-coal basically for 50 years. Can you imagine the amount of waste from all that coal being burnt and all the nasty heavy metals that are sitting around wherever they're sitting around that have been concentrated? That's the travesty. So you've got this very concentrated nuclear, spent nuclear fuel. All the energy has not been taken out of it. Bill Gates is working on a new generation of reactors that will run off spent fuel and take that remaining energy out of it. The idea I believe is frankly the way to go is when you have a uranium mine in hard rock. When you sell a pound of uranium, you should be able to take it back at a later date and store it underground in these former uranium mines. And we're a ways away from that, but there are a bunch of different issues we could deal with, spent nuclear fuel. And once we remove the hysteria from it and just stick to science and common sense, there are lots of solutions for it. Like right now, I'm told that spent nuclear fuel is just, the people are so freaked out about even putting it on the road that they leave it at the nuclear power site and it's just sitting there, which is, that's probably not the right option long term.
Right. That scale puts it in perspective, though. Your comment about one football field 10 feet high. I mean, that's mind blowing. Well, it's very compact, and I've not worked the numbers about. Can you imagine what the waste left over from burning 50 years worth of thermal coal? Yeah.
And the cadmium.
Yeah.
And all the other nasty heavy metals that are left. And what's happened to all those nasties? And where are they right now? Are they in a landfill? Or are they in their water system? Where are they?
All the above. Yeah.
Nobody's freaking out about that. Or how about the stuff a lot of it was pumped into our air and it was breathed into our lungs. That's why coal-fired power plants have been shut out of as many places who have figured that out. Like I know Ontario shut down their last coal-fired plant years and years ago, and they're all nuclear. They're not all nuclear. Substantial part of the Ontario power grid is nuclear.
Yeah. Okay. So I want to get back to, let's say we're right. There is a budding uranium market. You've been through a few cycles in the commodity sector in general, including uranium market. So Warren, talk to us about how you're going to position yourself, long-term speculative plays. How are you going to make money off the uranium market?
I'm going to start initially. I'm going to stick with the more conservative names like a NextGen.
Okay.
They'll perform very, very well, but at some point they may get overpriced, or they may actually just get bought out. So I won't have a choice as to how to play it. But generally with these markets, as they, first of all, it's like uranium has bottomed around the $18 level. It's coming up to around the $28 to $30 level. It's gone as high as the low 30s and a step back here to 28. Once we're on a strong course, what will happen is there will be the guys like myself will transition out of the blue chippers and into some of the more aggressive names. And depending how far down the risk profile we go, as in down the quality spectrum, but increases our risk, that'll be sort of the next wave following the original move of the big names like the Denisons and the Next Gens and the Cameco's, and they're all running. Some people will take some of that money, transition out, and start taking few more punts on some of the juniors and some of the up and comers.
Yeah,
and there can be a lot of money made in those up and comers. And there are many people who have talked about in the last cycle there was hardly any uranium companies to begin with, but there were several hundred. There's estimates between 400 to 600 uranium companies by the time uranium hit 140. So rest assured, for all your punters out there who want to play, the original wave, I'm going to be playing it with the more conservative names. As the wave gets underway, I'll be getting into some of the more new issues of the more aggressive names. But at the end of the day, one has to remember that 90% of these new uranium companies that will be coming to market, maybe 95% of them, in the next uranium downturn or in an ugly uranium market, they'll be dropping to virtually zero in value. So it's purely speculation at its best. It's hot potato. It's you want to play it for as much of the run as you can, but when it starts to turn and the game is over, you don't want to own these stocks. This is not Warren Buffett, Charlie Munger investing. This is not value investing. This is cyclical investing. We're playing a cycle here. And right now, we got a serious supply problem with uranium, and demand is building every year. So the fundamentals look good. We're going to get a good uranium market, hopefully sooner rather than later. And there will be lots of fun had in that. But just remember, especially with these lower tier names, they're not investments as much as they are speculative instruments. And please don't own them when the cycle ends, because this is not
okay. I'm with you now. And now, last question: any tips for my audience, Warren? How do you identify? Because that rising tide lifts all ships scenario. It's a lot of fun. Yeah. You can make a lot of money. You still want to stick to the top 5% if you can, right? So, but cutting out that bottom 95% or that bottom 80%, that's the most important. So, what are the red flags that our audience should look for to determine which are absolutely a waste of time?
Yeah, well. Yeah, it's there's so many red flags. I don't know where to start. All right, well, let's think about it. Generally, what you don't want to be doing going into a cycle like this cycle will be up and down within probably, it'll be like a 3 or 4 year play, right?
Yeah.
So if you're investing in early stage, we've got a jungle and we think there's uranium there, you will not find and prove up that uranium by the time the cycle is over. So getting too early stage, it could be good for speculation, but at the end of the day, it's not going to be pleasant. You also have to watch, as in any commodity, a lot of the retread projects that didn't work last cycle and they're not going to work this cycle. Or looking at interesting issues like whether it be metallurgy or going into countries which you don't have a hope of ever permitting it. There's a project right now in Spain. They're having a tough go of it with permitting. There's still a lot of issues around uranium, and a lot of countries don't want uranium mining. For instance, there's uranium in Brazil, but you can't go in there and start a uranium mine in Brazil on your own. It just doesn't happen. So uranium's a tricky one. So if I was looking at how I would play uranium, I would stick with countries that are already producing uranium, like in Africa, I'd look at Niger. A lot of their mines are a little higher cost, but they should do well in a very good uranium market. But the creme de la creme, it's northern Saskatchewan in Canada, right? That's the place. People will be trying to talk about, Well, the U.S. needs strategic. The U.S. is the largest consumer of uranium. They have virtually no production domestically, and
Right.
I've got this in situ leach project in Wyoming. Blah 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 blah. Well, I'm not a super big fan of that because despite the U.S. not having the uranium resources, their closest ally in the world, Canada, has tens of millions of pounds of production of uranium, or should before too long.
Yeah.
So it'll be. Your closest ally has uranium, so the U.S. should just relax about that, I think. And then trying to invest in Kazakhstan, it's not northern Saskatchewan, that's for sure. And in Australia is the third largest producer in the world, and they seem to be a little flaky. Some areas love uranium, some don't, and then you're dealing with some of the indigenous peoples don't like uranium mining on their property, and so there's a lot of old stereotypes with respect to uranium mining that still play in around the world, even in mining countries like Australia. Everybody doesn't want the earth to continue to heat up. They don't want to burn hydrocarbons, but none of these environmental groups give any realistic option as to how to power the earth. And trust me, if I'm running a factory in Hong Kong and I'm producing whatever I'm producing, I need steady, consistent power. Mm-hmm. And it's either coal or nuclear or natural gas.
Right.
And if we're going non-CO2, it leaves one power production. And of course, there's always hydropower. That's an amazing form of power. But I hope we get nuclear technology to the point over the next several decades where people are getting increasingly comfortable with it. The Chinese obviously are. They have their own new technology themselves. And in a panacea, can you imagine in 30 years' time when we go up to Revelstoke and that the dam up at Revelstoke, you're saying, well, this is no longer economic. Let's return the river to its original flow. Let the fish live back in the rivers. Let's remove all these dams that have been destroying our water systems around North America and the world. We've got these small modular reactors. You generate massive amounts of power cheaply. And ideally, these big monolithic hydropower plants are no longer economic. Let's remove them from the rivers. Let's restore the rivers and get the fish back. Like that's the panacea, I think. But
100%. I completely agree with you. Okay, awesome. Warren, look, it's been great having you on and catching up and getting your perspectives and opinions in front of my audience. So I really appreciate your time.
Well, thanks for having me, Jay. Really enjoyed it. Thank you.
Okay, we'll do it again sometime. If you are just tuning in, this is the Nuclear Energy Investment Summit, and I am Jay Martin, an investor and the CEO of Cambridge House. What I do on this YouTube channel is sit down with investment gurus from all over the world so I can find the smartest home for my capital. And that's what we are doing today with a focus on the nuclear and uranium sector. I'm now joined by Scott Melbye, CEO of Uranium Royalty Corporation. I love this conversation. I think Scott is the most intelligent individual when it comes to talking about the macro trends in the nuclear energy and uranium sector. Enjoy.
What I love to do is introduce the right people to the right people. I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today. Please give my panel a round of applause. Welcome.
Okay guys, Jay Martin here, CEO of Cambridge House, and I'm joined right now by Scott Melbye, the CEO and president of Uranium Royalty Corp. Scott, how are you?
I'm great, Jay. It's great to join you and your viewers today.
Yeah, I'm glad to have you on. I'm looking forward to chatting with you because there's been a ton of hype around the uranium market recently. I've been watching it very closely. And, I could say that over the last decade, doesn't matter what the uranium price is doing. If I host some uranium content at my conferences, it's like a packed room. The loyalty and dedication of uranium investors is something to behold. Now, I wanted to chat with you because, Scott, honestly, when I get excited about an idea, the first thing I do is I shortlist the top entrepreneurs in the business, the ones that I have the most confidence in. Everybody that watches my show knows I'm people over everything every single time. But then secondly, I stress test the idea with the top macro thinkers who can identify my blind spots and poke holes in my theories and identify things that I'm not seeing, right? And you tick both of those boxes. Truthfully, when I talk to a uranium exploration CEO, they often point to you as the voice of authority in the sector, that they pay a lot of attention to you. So I'm really grateful you had time to come on the show today and walk through the uranium sector with my audience. So thank you. Where I wanted to start was just, Scott, give us your perspective right now. What are the macro trends that you're paying the most attention to in the uranium market today?
Yeah, well, Jay, it's an exciting time for us, and our optimism in the uranium space is really founded from a number of different catalysts. You have the nuts and bolts, supply and demand fundamentals, which today are probably better positioned today than they've been in a very long time, which is not surprising. A commodity like uranium that has been beat down so low and so long in an 8-9 year bear market, you're bound to have supply and demand fundamentals react favorably to that. And we certainly, that's been the case with demand. Nuclear generation today has rebounded to pre-Fukushima levels. So that translates directly to uranium consumption, has really recovered from Fukushima impacts over the last 7-8 years. But we've also seen the supply side cuts as a result of, first, the low uranium price, which has caused producers like Cameco, Kazatomprom, producers in Africa, Australia, United States, all cut back production to preserve their resources in the ground and sell them into a higher uranium market going forward. That was made even more profound with COVID in 2020, where we saw additional cuts to production occur as a result of health and safety concerns at mining operations around the world, which we're still not completely out of that impact. Big mine in Canada, Cigar Lake, continues to be down in Saskatchewan. I think in Kazakhstan, you're seeing mine production, down pretty significantly year over year and beginning to come out of it. But you have that great supply and demand story. The third element in those fundamentals is the utility procurement cycles, and when utilities come to the market, and they've been buying uranium in the long-term market at below normal levels now for probably 7-8 years. So that's beginning to turn, because we know the utilities, if they're operating the plants the way we know they are, their unfilled requirements are growing dramatically, and they need to go back to a normal procurement cycle. So this new market dynamic really hasn't been tested yet. But I think another thing that's really impacting our industry right now is the mega trend towards clean energy and green energy.
Right.
And those of us in the industry have always known that nuclear power provides baseload power without carbon emissions or air pollution concerns that other energy sources have. What's happening now is environmentalists, politicians, policymakers, investment communities beginning to realize the role that nuclear power plays. In the United States, we're 20% of electricity supplies in the US, but we're 55% of the carbon-free energy. So this collision of green energy megatrend and supply and demand fundamentals bodes very well for uranium going forward.
Now, then, are you seeing the perception change? Because you're right, uranium or nuclear energy has been labeled, right, with this stigma, right, which is pretty, I think, misunderstood when, to your point, it's incredibly effective, energy per square foot production, the zero carbon emissions, all this stuff. And if you don't choose nuclear, it's not like you're choosing solar or wind, you're choosing coal, right? It's a poor trade-off, in my opinion. But talk to me about that stigma, because we could point to the obvious black eye. It's just been some mistakes and some disasters. But talk to me about that stigma and how maybe that's been misunderstood, Scott.
Yeah, I think in terms of safety, if you go all the way back to the beginning of nuclear power, nuclear energy has been one of the safest, if not the safest form of electricity generation when you measure the massive amounts of electricity produced since the 1950s to today. Really the glaring exception being Chernobyl, which, was a reactor type that really is not something that in the West we would ever build such a reactor, and is certainly not the reactors we're operating now or building going forward.
Right.
So it's always been safe. It's just the stigma that's carried with it. But I also think we're beginning to see also what happens if we move towards a green energy economy like Germany did over 10 years ago, but moved away from nuclear power. What has it resulted in? They have, their neighboring country, France, that's 74% nuclear today, has electricity rates half that of Germany. They have carbon emissions a tenth that of Germany's. And Germany is now beginning to see their manufacturing export economy impacted by companies leaving Germany and moving to Asia and other regions where they have cheap, affordable power. So we're beginning to see that, exactly what you said. If we go green without nuclear, you're just relying more heavily on fossil fueled electricity. In Germany, it's lignite coal or natural gas from Russia, which presents geopolitical issues for Germany and other countries to rely on Russia in that way. So we're beginning to see, with environmentalists, there's always been some that have bucked the trend and realized where nuclear fit. We're now beginning to see a much broader acceptance among maybe they fear carbon emissions from coal more than they fear nuclear energy. But hey, we're winning converts. And like I said, policy-wise, we're beginning to see real changes and look no further than the United States with the Biden administration.
Yeah, I wanted to ask you about that because that's been the barrier, right? It's not been technological, it's been policy driven, right? Mm-hmm. Given your experience, Scott, what's your perspective on the Biden administration's responsiveness to nuclear energy?
Yeah, well, I've been in the nuclear energy industry 36 years, so I've seen all the changes in government policy and public perception. Generally speaking, in a Republican administration, nuclear power is a welcomed, important part of an all-of-the-above energy strategy, which is nuclear, coal, oil and gas, wind, and solar. In a Biden administration, I'm not sure we may be in a situation where we could actually be more relied on than we are in an all-of-the-above type energy policy. On day one of the Biden administration, they reaffirmed commitment to the Paris Accords, put a stop to the Keystone XL pipeline, and put a moratorium on drilling on federal lands. That's a pretty strong statement considering the amount of jobs and employment and that impacted on day one of the administration. So it kind of gives you an idea of where they're going with fossil fuels. So the fact that we're not carbon emitting, and the Democratic Party put nuclear energy in its party platform for the first time in decades bodes very well for us. Now, I think we still, as an industry, need to lobby very heavily in the new Congress and the new administration to make sure everyone, has gotten the memo that nuclear is clean and green and part of the solution. But the indications we're getting out of the new administration, including the new energy secretary, which was just confirmed today, that nuclear will play a part in this new administration. And they're especially keen on this next generation of small modular reactors and advanced reactors, the kind that Bill Gates, yes, Peter Thiel, folks like this are investing in. So I think we have the potential here to build on, the currently today with 442 reactors operating around the world, increasing their capacities through uprates, extending the licenses of those big reactors, and continuing to build big reactors in India, China, Middle East, and in these emerging markets. Now we get to layer on top of that the small modular reactors, which is an entirely new and additional market for uranium going forward.
Right. Okay. Now, talk to me a little bit about jurisdiction and source country, because it's been a topic that dominates the conversation in the commodities market today, more so than it has in the previous decade. How important is that how is it important for America to develop a domestic supply? And you can factor Canada into that, but is that a priority?
Yeah, well, I wear two hats. I'm executive vice president of Uranium Energy Corp, which is one of the founding companies behind Uranium Royalty Corp. And I've also assumed the presidency of the Uranium Producers of America trade organization in the United States. So, we're keenly aware of those issues. I think in the United States, I think maybe due to cost pressures or just, a lot of the influence of state-owned entities producing uranium and selling into Western Europe and the United States. The United States has now found itself reliant on Russia or Kazakhstan, former Soviet countries, for about 50% of their uranium supplies. and a significant amount of the uranium enrichment supplies coming from Russia. I think that was kind of as a result of cost pressures. But now going forward, as the world is embracing nuclear power, China's emerging, Russia's building plants, 30 different plants in 12 different countries. I think the U.S. Industry and electric utility industry and European needs to look at their strategic sources of supply and look at diversity more importantly. So I think the need for, if you want to say North American uranium, Canadian and American supplies of uranium, I think will grow in importance. They've always been important. U.S. led global production in the 1980s. Canada led after that, before Kazakhstan taking over Canada. So just from a utility supply diversity, I think it's important to not be reliant too much on countries that don't always share your own best interests. We also have layer on that the United States, through our nuclear navy, the submarines, aircraft carriers, are all reliant on uranium fuel that has to be produced from U.S. domestic sources. And, we're on the verge here where we've nearly lost our capability to produce uranium for that fleet of ships and submarines. And so I think it was behind the Trump administration wanting to really revitalize the nuclear fuel cycle and nuclear energy industry in the U.S. to regain its leadership and also be able to produce its own fuel going forward. So the Strategic Uranium Reserve, which was passed funding for bipartisan basis in the last Congress and is now being instituted at the U.S. Department of Energy, will be a good first step to try to get our U.S. Domestic production base back up and running. And I think the utilities benefited as well, having a more diverse, vibrant domestic uranium industry.
Okay, so I'm glad you mentioned aircraft carriers and submarines, because I've been super curious about, I guess, like speculating in the future, Scott, where else nuclear power could go in terms of infiltrating all the big industries that we rely on, like shipping, transportation, big tankers, all this stuff. Do you have any thoughts there, Scott, where in a best case scenario, this technology could go?
Well, absolutely, Jay. I mean, it really is exciting right now, and we're beginning to see some of these new applications taking the existing nuclear technology and applying it in different ways, or going to advanced reactors. But take the aircraft carrier and submarines. Those are essentially small modular reactors. And they have been operating safely in wartime conditions under the Arctic and the Persian Gulf since the 1950s. So it's not surprising that sort of small modular reactor is being taken and being applied to more scalable reactors on land that can be built in a factory, shipped on site, and added to in a scalable way. The markets for that are almost unlimited. I mean, obviously, we think of rural, remote locations or island nations or states that are still relying on diesel fuel for electricity, which is incredibly dirty and very expensive. And in some places like mining operations in northern Quebec, Ontario, Northwest Territories, they're having difficulties getting the ice roads are not frozen as long in a year as they have been 20 years ago. So getting diesel oil into these mines and remote locations is getting harder. So the small modular reactors are kind of being identified as a way to move in that direction. You also have companies like Newmont Mining, the largest gold mining company in the world, has basically made a commitment to go carbon-free by 2050 in their operations. So, it's going to be hard-pressed to see how wind and solar are going to power large open-pit underground mining operations without disruption or very expensive battery backup to that kind of system. So nuclear has great applications there. But you've mentioned other things. We're hearing that the shipping industry is also being pressed to go towards carbon-free or lower carbon operations. So certainly it works in that regard. Space travel, we're hearing that space travel to Mars and these planets, both for propulsion to get us into space, but also once we get there, if you're going towards the sun, solar might be an option, but going the other way, it's going to be these small nuclear reactors that power space stations and perhaps even settlements on other planets. So we're really in a stage where the sky's the limit. I mean, you have nuclear power being able to produce hydrogen, which can also resolve other fuel issues as transportation may move to more hydrogen type fuel cells. The desalination of water in the Gulf states or in arid regions where you can always take seawater and make clean drinking water out of it, but it's so energy intensive. Nuclear, again, can provide electricity and clean water for those kind of applications. So, we're very, very optimistic of where we're heading in nuclear power. Again, I think we've seen the big growth stages in the 60s and 70s and the advent of commercial nuclear power. We saw, again, the nuclear renaissance rekindle that in the early 2000s. But I think this, is going to be a combination of large reactors and small reactors, and these different applications really driving uranium requirements going forward.
Right. Honestly, I was excited to hear you even mention space exploration. Just like recently, Elon Musk was back on the Joe Rogan podcast talking about the limitations of solar from the standpoint of the surface area required. He predicts that solar will never actually reach a point where it could even just charge a Tesla sedan. He's like, there's just not enough surface area. We'll never get there. Maybe a minivan. We've got more surface area, but space flight, never. That's his prediction. Yeah. He's like, this will always be, it'll never work. We'll always need fossil fuels. Rogan didn't ask him about nuclear. I wish he did. That would have been interesting to hear his response. I wonder what his thoughts are.
Electric vehicles is a huge driver too. And you'll see the United States really maybe play a little bit of catch up to some of the European nations that have made hard commitments to move towards electric vehicles. But, I think Elon Musk put it quite directly and said, if we move to that amount of electric vehicle adoption, in the developed world, we'll need to double our electricity consumption. And you're going to double electricity consumption at the same time that you're eliminating some of your largest sources of electricity presently, like fossil fuels. So Nuclear really plays a key role there. And I mean, if it's an electric vehicle and it's powered by a coal-fired power plant, it's a lignite car. It's not a clean vehicle. Yeah. So we definitely we see, and again, you're seeing some of the tech leaders like Peter Thiel, Bill Gates. They've done the math and science, and they've seen the limitations. I mean, we only need to look at what happened in Texas this last week, California recently, South Australia, and then the example in Germany where we've seen a long-range example of what happens if you rely too heavily on renewables. There is a diminishing return. Once you have that much intermittent supply on the grid, the reliability issues become quite serious, and the cost to back that up just doesn't make sense. And I think a lot of folks in Texas are wondering, the value of having so much wind power now. In defense, it was also some gas-fired generation that was really impacted by the cold weather, distribution, everything else. But nuclear, typically, I think in Texas last week, we had 3 out of 4 nuclear plants were in operation. The 4th unit came on after 1 day. So it's really just demonstrated through hurricanes and previous cold weather events. Like up in Illinois, they had the same kind of cold wave snap come through there. And you had nuclear power, as it always does, providing 24/7, 95% capacity factor, clean energy, as opposed to wind power and solar at best, maybe 25-30% capacity factor. So that's the real rubber hits the road.
Right. Okay, I could keep on talking about this with you for forever. I do want to give my audience the chance to hear about the Uranium Royalty Corp story because it's pretty unique. It's a unique model in the uranium sector. I recall when you guys went public, I think it was the largest IPO on the venture exchange in terms of participating investors. And we had this massive crowd on my stage at our Vancouver conference in January. It was like 300 people up there clapping their hands. It was pretty rad for the market close. Super fun. So just backing up, if someone's unfamiliar, Scott, if you're buying a share of URC, what are you purchasing?
Yeah, well, URC is, as you mentioned, we launched the IPO in December of 2019. It was the largest mining IPO in Canada that year. But what we did with URC is not try to reinvent the wheel. We saw the enormous success over the last 10 to 15 years from Franco-Nevada, Wheaton Precious Metals, Sandstorm, Royal Gold, Metalla Maverick, you name it. It's really become a $50 billion industry, providing a really attractive way for investors to get pure commodity play through diversified investments. For the investment community, from a mine in development side of the equation, we're able to provide alternative mine finance in addition to debt and equity. And we've seen in base and precious metals that it's no longer alternative. It's become mainstream in terms of building the next generation of mines. Uranium is ideally suited because we don't have any such royalty streaming companies in our space, but we have a huge, probably $2 billion plus capital lift to build the mines that are needed to meet all this increased demand from reactors that we've just talked about. So, we've launched. We have 15 royalties in our portfolio. We intend to be absolutely geographically diverse and present in every major uranium developing region, whether it's Australia, Africa, Canada, the United States. We've already started with a good portfolio in place. It was made just that much better last week when we announced that we acquired royalties in McArthur River and Cigar Lake, which, it would be like having a royalty on Escondida in the copper industry or the Grasberg mine in gold. So very excited to have interest in those mines. They're obviously currently in standby or shut down due to the market and COVID, but they're obviously some of the first mines to restart as those conditions improve. So that's an example of the kind of investments we're going to make. And this, just like Franco-Nevada, started probably with 3 or 4 royalties in the portfolio. You'll see us grow, I think, exponentially in the coming years as we add counterparties to the portfolio. We're already at work looking at the follow-up deals to our McArthur and Cigar announcements. So great investment alternative. You get all the benefits of ownership in these mines without, we're typically a top line beneficiary through royalties. We don't have the capital requirements or workforce requirements of maintaining large operations. We just get the benefit of their operations through these financial interests. So very low overhead, very low G&A. These are some of the most profitable companies per employee of any industry. And so we're certainly pleased to be up and running and have a uranium market, which is just perfectly situated for us to deploy this business model.
Yeah, and you guys have been busy since 2016. I think you said 15 agreements in the portfolio. My audience is really familiar with the model. Actually, one story we've had on a bunch this year has been Nova Royalty, third-party agreements in the copper and nickel space, appealing for many of the same reasons. So, Scott, talk to me about what's next. Are you guys in hunting mode? Are you in harvest mode? What could investors expect from you in terms of news flow?
Yeah, no, we're definitely in the hunting mode and grow. Absolute growth mode. We, like any good royalty company, you need to have great near-term, medium-term, and longer-term assets. We've got some really good sort of longer dated assets in the form of the Rough Rider project in Saskatchewan, which was a $650 million acquisition by Rio Tinto in the last cycle. That's going to be a great addition to the Saskatchewan mining scene as Cigar Lake depletes its current reserves and shifting to newer operations. So that's a great tuck away for the future. So is the Michelin deposit in Labrador, one of the largest undeveloped deposits in North America. But we realize investors want to see that visibility to near-term production and cash flow. So I kind of put our targets in two categories. One are mines that can either restart and produce and cash flow in this cycle, or start up, meaning they're fully permitted and don't have a long construction lead time or permitting time to get into production. It's pretty tough in uranium, so the universe is limited, but we've shown through the McArthur and Cigar Lake it's not impossible to acquire those. So that's a very high priority for us. We're also looking at projects which may not, second category of projects that may not produce and cash flow immediately, but as the uranium price recovers into a $40 to $50 range, which we see is entirely reasonable given where we're at today, they're going to see their business models advance dramatically, and not just to generalize, but good examples would be the projects like Denison's, Fission's, NextGen's in Saskatchewan, where in a strong uranium market, their business models are really going to advance. And we'd love to have something with those projects. But, we're looking in presently at projects in Australia, Africa, and elsewhere to continue to add to the portfolio.
Okay, excellent. Well, look, Scott, I'm really glad you can make time to come and chat with us today. Speaking to my audience, as you guys know, I'm all about the people, and I wanted everyone to get to know Scott. If you're investing in URC, you're investing in Scott Melbye, and now we know you. So I appreciate your time. Thanks for it, Scott. I appreciate it.
Absolutely. Thank you, Jay.
If you are just tuning in, this is the Nuclear Energy Investment Summit, and I am Jay Martin, an investor and the CEO of Cambridge House. What I do on this YouTube channel is sit down with investment gurus from all over the world so I can find the smartest home for my capital. And that's what we are doing today with a focus on the nuclear and uranium sector. I'm now joined by one of my favorite entrepreneurs in the resource business, Amir Adnani. Today he's speaking to us as the CEO of Uranium Energy Corporation. I really enjoyed this conversation. I hope you do too.
What I love to do is introduce the right people to the right people, assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today. Please give my panel a round of applause. Welcome.
Okay guys, Jay Martin here, CEO of Cambridge House, and I'm right now joined by Amir Adnani, the CEO of Uranium Energy Corp. Amir, how are you?
I'm good, Jay. Nice to connect with you. Talk some uranium. I like what you said before we started recording. You said, I'm out hunting for clean energy in the world. Is that what you said?
That's what I said. That's what I
know that sounded good.
When I look at UEC, that's what we see is a company hunting to fulfill, right? A demand for more energy, cheaper energy, cleaner energy. I know that's the mission.
Yep, absolutely.
Okay, so I'm excited to sit down with you because this is part of my deep dive into the uranium sector. You know what we do here. When I get excited about an idea, first thing I do is shortlist the top entrepreneurs in the space that I think investors should look at. I'm all about the people first, people over everything. That's my approach. And then secondly, I want to stress test the idea, right? I'm bullish on uranium, but I've got blind spots. So what am I missing in the macro picture? And so then I talk to the industry experts, and you're somebody who ticks both of those boxes. You run, Uranium Energy Corp. You're the chairman of Uranium Royalty Corp. You're also called upon by a variety of media sources from, industry like Kitco and Sprott up to Fox News to get your perspective on what's happening in the market. So I'm really glad we have the chance to sit down with you today. So I want to start with that, the uranium picture in the US, because there's been more and more conversations about the necessity of a domestic supply. How important is this? It's 20% of energy consumption, but the US relies, almost 100% exclusively on foreign uranium. That's correct?
Right now, it's 100% dependent on foreign uranium. Correct.
Okay, so with Biden now in office, is there going to be increased importance on domestic supply? What are your thoughts?
I think it's a combination of a new administration with President Biden, but also how COVID and the experience we've lived through with a pandemic makes us think about supply chains. So what do I mean by that? I've been banging the drum, banging the tables since 2005 when I founded Uranium Energy about the shortage of domestic uranium in the United States to meet the needs of nuclear reactors that generate electricity. And that's what the uranium is needed for. I mean, for anyone watching this and they're wondering uranium supply demand, uranium is the easiest commodity to understand supply demand for. We need uranium for one purpose, it's the fuel for nuclear power plants to generate electricity. And so you look at the number of reactors and that's your demand base. And so here we were in the US, and in the US, there are just under 100 nuclear power plants operating. And that's the largest nuclear fleet anywhere in the world. And it's generating over 50% of emission-free electricity in the US. And so it's a very important part of the grid. It's green, it's baseload, it works around the clock. And we've been seeing this decline in US production for 15 years. And that was for me as an entrepreneur exciting. As an entrepreneur, I saw that and said, this has to change. There's going to have to be more domestic supplies developed at some point. The US used to lead global uranium mining in the 70s and 80s. So we've been, as a company, Uranium Energy has been looking at this issue for a long time and positioning and building for it. We became a uranium miner in the US with our Texas facilities in 2010 mining uranium.
Yeah.
Then COVID happens. Okay. And when COVID happened, we started to really appreciate what it meant to have supply chains and to have local supply chains. Everything from masks to ventilators to pharmaceuticals to vaccines. We now realize and see what it means when you don't have local capabilities in your own backyard. On a day-to-day basis now, when my wife and I go looking for daily groceries and basic needs, we actually think about what does it mean if we buy and support something that's made locally versus overseas, because those things, we now appreciate how critical it is to have supplies in your own backyards. In that context, uranium today, which is still needed as the fuel for over 50% of carbon emission-free electricity in the US, 100% of those uranium requirements are being imported, and not from Canada, not from Mexico, because Canadian mines are shut down as well, but completely from overseas sources. The biggest suppliers of uranium in the world today are Kazakhstan and Russia. So you stop right there and you say, this doesn't seem right. And the Trump administration was focused on this issue, and they developed basically a proposal to create a strategic stockpile of US origin uranium, basically build strategic government inventories, something that hadn't been done since the 1950s. And what we've seen with the Biden administration is a continuation of that framework of thinking, that policy and that commitment. So luckily, this is one of those few areas where it's completely bipartisan. There's bipartisan support in the Senate and the House for funding the creation of what is being called a U.S. uranium reserve. The Biden administration, President Biden himself, just the other day issued an executive order coming right out of the White House saying he wants to study supply chain issues in a number of key industries, including energy. And areas like uranium are very much areas that will be looked at. And it won't take a scientist to realize very quickly we consume 50 million pounds of uranium. We're the world's biggest consumer in the US, and we produce zero. And what should we do about that, guys? And so this is now, I think, what we're heading into. And when you look at also other objectives and priorities, right, about decarbonization, electrification, and those areas also, those priorities around what the Biden energy plan is and what the Biden energy focus around green energy and, again, decarbonization requires, it requires nuclear power. And that's why, again, the role that uranium can play is so critical. So long answer to your question is that's the way I see it in terms of what all those priorities, how they all kind of come together. And what we're hoping to see here in the coming weeks is more news about the timing of the implementation of the U.S. Uranium Reserve, which is going to be a 10-year program, right, where the U.S. government over the course of the next 10 years plans to buy $1.5 billion worth of U.S. mined uranium. This should be a great way to incentivize the development of domestic sources of uranium mining.
Yeah, 100%. And I'm with you. So there's a ton of trends occurring there. I mean, the Biden climate action plan alone is like the initial expense is $400 billion towards renewable energy. And I think that's probably just the appetizer driving this direction. So, okay, this puts it into focus why you built UEC the way you have, right? Very focused on Southwest US assets. For anybody not familiar with the story, Amir, can you give us the highlight reel?
Uranium Energy Corp is a US-based uranium-focused company. It was founded in 2005 by myself. I've been the CEO of the company since inception. I remain a top 5 shareholder of the company, and other insiders have significant skin in the game in this company. The chairman of the company, Spencer Abraham, is the former United States Energy Secretary, and so very familiar with the political and policy issues that we just touched on. Having a former energy secretary as the chairman of the board puts us in a unique league, having a voice as a company in certain circles and political circles that will matter. Scott Melbye, the executive VP of our company, 36-year veteran of uranium mining. He's the current president of the Uranium Producers of America. That's our industry association. And our technical team is really comprised of individuals that have been in the uranium mining industry in the United States their entire professional careers in Corpus Christi, South Texas, and in Wyoming. These are the two states where the priority assets for our company are situated in. And UEC, from a property and project point of view, is very much focused on developing and advancing our hub and spoke strategy in South Texas. That this is what makes our company a past producer. We mined uranium in South Texas between 2010 and 2014. Today, we control the largest resource base of fully permitted projects that are in situ recovery amenable in the United States. And so UEC really, in a nutshell, can be summarized as being a US-focused uranium company with a history of past production. That's a proof of concept. Having a team of individuals from former energy secretaries to current presidents of our industry associations with technical capability, but most importantly, having assets that really goes with our human capital that have been fully permitted and they're ready for production and construction. That's so important because majority of the projects in the United States or the world today for uranium are not permitted for production yet. They're in the permitting process. And the process of permitting is time consuming. It involves community relation work. It involves compliance with regulatory aspects. We know directly from experience, and we've seen our own projects that are fully permitted take anywhere up to 7 or 8 years to permit from when you initiate that work. And that's something you can't buy with money. That's something that takes time and patience. So I'm proud of the fact that we've patiently built our business after 15, 16 years to be in the position today where we truly are a leader when it comes to having the capabilities to mine uranium in the United States using the most environmentally friendly methods, using the methods that are also very low cost from a capital intensity point of view. But again, with the people that really have the demonstrated track record, both to do that, but to fully understand the market and policy issues around our business as well.
Okay. Yeah. Now, I want to call out Scott Melbye because I also talked to him today. I don't know if there's a smarter guy in the nuclear uranium sector. He's fascinating to talk to. I want to talk about your recovery methods. You focused on in situ rather than conventional mining. Amir, why is that?
We looked at what works in the uranium mining industry and what seems to work in the uranium mining industry that has a track record going back to 30 years is this in situ recovery method. We have an animation video of it on our website at www.uraniumenergy.com. It's fascinating because you've interviewed, Jay, so many different commodity focused entrepreneurs, mining executives, and this method of mining does not play a significant role in other commodities as it does in uranium. In uranium, almost 50% of global production today is using the in situ recovery method, which is basically solution mining. Conventional mining, which is basically open pit or underground mining, is very capital intensive. It's basically an earth moving exercise. You're stripping, you're excavating, you're digging, and you recover tons of ore, and you're separating minerals from rock, and you end up with waste rock and tailings ponds and all the conventional ways of mining and everything that comes with it. In situ recovery, we're not moving earth. There's no extracting, there's no stripping, there's no open pit or underground. It's targeting certain uranium deposits that can be found in shallow sandstone settings. We basically drill water wells. We inject inject water with gaseous oxygen, so a very benign solution, and we recover the uranium that's been dissolved in solution. The birthplace of this method of uranium mining is in the United States. It's in Texas and Wyoming, where our company is based out of. And the individuals we have in our company are some of the pioneers of this method of mining. Countries like Kazakhstan have used this technology to take over global leadership with uranium mining. And so when we look at production growth in the industry over the last 15 years, it's been dominated by this technology. When we look at the lowest cost ways of the mining industry, this method of mining is in the first quartile costs. And the capital requirements for this method of mining, Jay, are measured in the tens of millions of dollars, whereas in conventional mining capital requirements are in the hundreds of millions of dollars or billions of dollars.
Right.
So low capital intensity or low upfront capital, lowest operating costs, and proven to be a method of mining that's gained scale and importance in the industry. Those are the reasons we're focused. In addition to the fact, most importantly, that it has such a small footprint. And so from a standpoint of winning the support of local communities and working with local communities that don't want to have some humongous thing in their backyard that you call a uranium mine, in-situ recovery is benign, very small footprint, limited to just basically wells that might be sticking outside the ground. You would never know that it was there. And so these are really some of the big key advantages and why we have focused on this for since the beginning of our company has been on this process.
Okay, so when it comes to news flow, Amir, investors are going to be wondering what they should look out for. I know you guys are busy right now on the Burke Hollow project in South Texas, currently drilling, correct? Talk to us about that.
We kind of entered 2021 with excitement and conviction about where we are in the uranium price cycle, and the recognizing and basically putting our money where our mouth is that these shortages of uranium between supply demand fundamentals and the shortages of uranium in the US, not mining any uranium while being the world's biggest consumer, that these dynamics at least gave us full conviction that we should be charging ahead, investing our capital into preparation for production. So on January 26th, we've announced the most aggressive pre-production development drilling program in the United States right now by any uranium company. We're drilling at our Burke Hollow project. We're drilling the monitor well ring that is going to make up our initial production area for that project and for the Burke Hollow project, one of our projects as part of our hub and spoke strategy in South Texas. Jay, when it comes to in-situ recovery or ISR mining, you call production a production area, could be called a well field. This well field we're developing at Burke Hollow is the largest of its kind in the 45-year history of uranium mining in South Texas, one of the largest ones being developed in the United States. So we really feel that it is also putting our company very much at the forefront of being a potential supplier to the United States Uranium Reserve, this new initiative that we talked about that's going to be created, and a potential supplier to utilities. And so really it's the news flow and development that you talked about for our company, I think in 2021 is going to be full of action. It's going to be exciting. It's going to be advancing projects in preparation for a sufficient recovery in the uranium price. And the trajectory is I think, in our side. The uranium prices last year were up 20%. This year's supply-demand fundamentals really are supportive of a higher uranium price. And when the uranium price gets to ultimately $45 or $50 per pound, you're not going to be able to flick a switch and say, oh, I'm going to start mining uranium. You have to lay the foundation now in terms of permitting, development work, having the people, all those key building blocks need to be in place in order to be a first mover, in order to gain market share when the commodity price is right, and to really have that winning formula. We really think it's about a long-term vision and strategy. We've been very long-term with how we've built our business up until now, but it's always staying 2 steps ahead. And the news flow so far this year is going to continue to demonstrate the leadership position that UEC, our company, has when it comes to the U.S. uranium mining business.
Okay, now for anybody who's about to take a harder look, Amir, touch on the cap table for us, cash position, insider ownership, anything you want to talk about?
I think, first of all, I would encourage everyone to take a look at the information available on our website. As I mentioned already, uraniumenergy.com, number one. Number two, again, the fact that when you look at myself, when you read about our company, when you look at our background, our people have been here since the very beginning. We've got skin in the game. We're the founders of the company. We've been with the business for 15 years. And that really shows the long-term commitment that you want to see alignment with equity, with other equity investors. When you look at our largest holders, Jay, you see individuals like Rick Rule, Warren Gilman, Maren Katusa, alongside BlackRock and JP Morgan as major holders of the company, alongside management. You see names like Fidelity. We are US listed only. So we're listed on the NYSE American market. We're a US company. We don't have a Canadian listing. And that over the years has allowed us to build a very large and loyal base of shareholders who remain very involved and engaged with us. We have a strategic equity interest in a company called Uranium Royalty Corp. We own just under 20% of that company. We made that call to take that position and be a sponsor of that company a few years ago, and it's worked really well. Our equity position today there is worth over $30 million. And so when you look at our overall cash and combination of our equity account and cash on hand as of our latest financial filings, gets us close to almost $50 million of cash and equity on our balance sheet. We've got a good financial position for our company. And we're covered by, I believe, 5 analysts that have research on the company. So again, lots of good information available to anyone interested to take a look at. And again, there's a lot of numbers and details here we're trying to get through in 2 minutes. So just visit our website. It's all available in our PowerPoint presentations or information that's available out there. Hopefully I covered most of that, Jay.
Yeah. No, you did. And I appreciate it, Amir. It's been great having you back on. So thank you for your time. And I'd love to do it again soon.
Likewise, it would be great. Thank you for having me.
If you are just tuning in, this is the Nuclear Energy Investment Summit, and I am Jay Martin, an investor and the CEO of Cambridge House. What I do on this YouTube channel is sit down with investment gurus from all over the world so I can find the smartest home for my capital. And that's what we are doing today with a focus on the nuclear and uranium sector. I'm now joined by Justin Huhn, founder of Uraniuminsider, to talk about why he thinks uranium is the most asymmetric bet going in the resource business today. Enjoy.
What I love to do is introduce the right people to the right people, assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today. Please give my panel a round of applause. Welcome.
All right, guys, Jay Martin here, CEO of Cambridge House, and now I'm joined by Justin Huhn, the founder of Uraniuminsider. Justin, how are you?
Doing great. Yeah, thanks for having me.
I'm really happy to have you. No, I'm really glad to introduce you to our audience and pick your brain a little bit. I'm trying my best to understand the uranium sector, and so I'm binging on content right now. And I'd love to get your thoughts. So where I want to start, Justin, is for my retail audience, for myself, when it comes to the macro trends driving the surging bullish sentiment in uranium right now. What's the signal? Cutting through the noise, what are the key ingredients and indicators that you focus on?
Sure. Yeah, surging sentiment. That's a good way to put it. It's been quite the run for the past few months. It's an interesting sector in that positive fundamentals have been stacking up for years, and it's just taken this last signal, I guess you could call it, that started in beginning December to really get funds flowing into the space. The absolute bottom was last March with the COVID crash, and with Cameco shutting down Cigar Lake, and with Kazatomprom cutting off their wellfield development right about at the same time in March and then April. That kind of kickstarted the spot price, which brought some funds into the space. That ran for a few months. Cameco said they're bringing Cigar back online, and it went back down for a few more months. What happened in December was the Bear Traps report, Larry McDonald's largely institutional newsletter, put out a report on uranium on Friday, December 3rd. That went out in the morning, and we immediately saw massive volumes come into the space. Later that day, actually after hours, Zero Hedge picked up the same, or picked up some pieces from that report, put out an article after hours. Yeah. That went out to their 1 million+ subscribers. And over the weekend and the following week, we just saw it continue. And it's held, and it's continued since then with only a couple of weeks of mild pullbacks, mild consolidation. And what we've seen is a just huge amount of funds flowing into the space. So that's what we're watching right now, because the spot price is doing absolutely nothing at all. In fact, it's slowly trickling down, but it's happening on really, really small volume. So historically, what happens in the uranium market is investors watch the spot price. It's the most visible reported price on the fuel cycle. It's the price that investors watch. And so when we saw the market really starting to fly without the spot market moving, then we knew something was up. So digging into things since then, what we've started to see is some institutional investments, some hedge funds, some generalist funds come into the space in a pretty big way. Right. We're seeing people like Michael Burry. We're seeing people like Larry McDonald and some larger, well-respected hedge fund managers and newsletter writers speak positively about the investing case for uranium, especially as a part of an ESG investment, as capturing an energy trade as one way to play a broader commodities run with a cyclical move from out of growth and into value, et cetera. So we've seen almost $500 million come into just the URA and URNM ETFs in the past 12 months. And I would guess that probably 2/3 of that has happened in the past 90 days. Those are just the ETFs. And we've seen record volume come into the mid caps, come into the large caps, NextGen, Denison, Cameco. So what we're seeing essentially is a broad acceptance of nuclear and of nuclear energy on one side, and on uranium as an investment case as part of these commodities, ESG investing, kind of come together at the same time. That's kind of what we're seeing,
right?
In my opinion.
Now, what's behind that acceptance? Because is it just demand, Justin? Is it a change in perception? I mean, most of my life, nuclear energy has been stigmatized somewhat inappropriately. But is the perception changing, or is it just demand fundamentals are too strong to ignore? What are your thoughts?
It's both. Perception is definitely shifting, even from just, I've been following this market for close to 5 years now, even 2-3 years ago. To expect to see what we're seeing now as far as sentiment around nuclear energy is pretty astounding. We never would have thought we would be seeing this. So we're seeing, the environmental left slowly start to embrace nuclear energy as clean energy and as an essential part of some sort of green energy future. In the States, the Biden administration is showing support for nuclear energy. We're seeing it across the globe. So that's part of it, and just this increasing acceptance of nuclear. And then you also have a glaring supply and demand deficit, a supply deficit, and a supply and demand disjunct in the uranium market that has been obvious for years. And I think uranium investors that have been aware of this for the last 2-3 years are kind of like, finally the market is waking up to this, because it's been clear. Right now we've got about 180 million pounds of U3O8 equivalent demand globally annually. And last year we had about 125 million pounds of uranium produced. It's a huge supply deficit. And that doesn't include the secondary supply that comes in from tails re-enrichment, from underfeeding, some MOX fuel, some mixed oxide re-enrichment of tails, things like that. But it's still a huge supply deficit that doesn't really change until we have higher uranium prices to justify, firstly, bringing on the mines that are under care and maintenance, most notably, Cigar Lake right now, currently, that's down because of COVID. We expect that to come on this year, probably in the next few months. But McArthur River, which is 18 plus million pounds a year mine, owned by Cameco in Saskatchewan, that's been down since June of 2018. And Cameco stated they're not bringing that back until they have a sufficient order book in the 40s per pound, which they have not yet even begun to fill. We also have Paladin's Langer Heinrich mine in Namibia that they need about $55 a pound to justify that mine coming back online. And so with Cigar back, with McArthur back, with Paladin back, we start to approach, and we don't expect all of that to happen for a number of years at this point, because it takes a long time, plus the uranium price justifying it in the first place and the capital needed to do the restart. We start to see a slowly balanced market, but it doesn't really matter, because the way that utilities purchase when they come into the term contract market is they purchase out for 5 to 10 years at a time. So even with these care and maintenance mines coming back online, we still see an increasing deficit, let's say 2025 to 2030, that we need many more new mines. All of the mines that are planned and proposed, all of those need to come online in order to even approach filling that deficit by the end of the decade. Got it. So if you're running Cameco today, are you looking for acquisition targets? Not necessarily. I think that people have been screaming for Cameco to buy NextGen.
Yeah.
And I think that they had the opportunity last year and they didn't take it. So I don't necessarily see that happen right now. They still do have some JV exploration partners. They have a pretty long life mine with the JV with Kazatomprom at Inkai. And they have expansion potential for both Cigar and MacArthur to produce more than what is currently stated in their mine plan. So I think that they still, even though the writing is on the wall that the market needs to go where it needs to go, I think that they want to see them start to fill up their order book for MacArthur and see that come back online, or at least the plans for that to come back online in the market to support it before they go on an acquisition spree. They probably also want to see the funds from this CRA tax liability case come back to them and be literally in their hands before they spend the cash or the shares on an acquisition. But I could be wrong, but that's my take. Yeah.
Okay. Now, how much do you concern yourself with jurisdictional risk in the uranium sector, Justin? Is it a core focus for you? Is it in the periphery? Talk to me about that.
Yeah, I would say it's a pretty core focus. It's not necessarily number one focus criteria for us, but it's definitely something that matters. We don't like to invest in anything that is in a jurisdiction where it's possible that they just pull the plug on the company's primary projects. It's just not something we're willing to gamble on. Of course, those companies typically have much lower valuations, and if you take that risk and things work out, you can have a huge winner. Yeah. But it's just too risky for our liking. Yeah, we prefer the jurisdictions that have a history of supporting uranium mining.
Okay, so then do you think, is it important for the US to develop a domestic supply? And you can factor Canada into that domestic supply, but do you think that's a core focus for the United States?
Yes, I do. Yeah. The United States produces 20% of their electrical grid from nuclear, and they produce almost zero uranium. Last year, it was a couple 100,000 pounds or something last year. It was next to nothing. So I think, there's a lot of politics behind whether or not to support the uranium market, to support the uranium miners, to support conversion and potentially enrichment. But I do think that it is a national security issue to have 20% of the grid unsupported by the actual feedstock for that energy source. So I believe it's important for the US and Canada as well. Yeah. Okay,
got it. Now, if we are at the budding stages of a uranium bull market, sure looks like we could be, you know how this is going to play out, right? There's going to be all kinds of cowboys and promotes that enter the space. And so I want you to give my audience some help in avoiding landmines. Justin, what do you look out for? How do you do, what's the quick diligence you do to remove companies from the watch list?
That's a good question. So what do I do to remove companies? One of the first things I look at is share structure for an established company. If you're talking about new entrants, or you're talking about established companies?
New entrants.
New entrants. Okay. New entrants is all about the management team, because I feel that the bulk of the great projects are probably already owned by a publicly traded company that's already familiar by the market. Or to the market, I should say. So it's all about the management company. So we have a position in a company that we took last summer that on paper, their projects don't really look like anything fantastic at all. Now they're moving in a good direction. They've been acquiring projects that are looking better than what they started out with. But the share structure when the company reorganized was fantastic. The CEO is fantastic. The team backing him is great. And the company was dirt cheap. So it was a no-brainer investment for us.
And now I have to ask the name, Justin.
I can't do that. Because of my newsletter subscribers. It would be treasonous. I apologize. But I mean, there's only 55 companies in the space. So if you look at who started, who went through a name change last summer, there's 3 options. You'll figure it out. Yeah. So yeah, it's all about, I would say, management and a relative valuation. So if a company's coming out and the valuation looks cheap and the management looks trustworthy based on their past performances, what have they done in the past? Have they done anything shady? What's their ownership? Are they buying into that initial funding personally from money out of their own pocket? That's always a good sign.
Yeah.
Have they acted respectfully towards shareholders of previous companies? That's kind of what I would look for in a new company.
Okay. And then, yeah, I mean, you asked me to differentiate. So what about existing companies?
Existing companies, I look at share structure pretty quickly. I prefer to not have billions of shares outstanding. I prefer to have a lower percentage of outstanding options and warrants as a percentage of total fully diluted shares. If you see a company with like 50% of their fully diluted is in options and warrants, it's a pretty big overhang. It shows that there's been pretty excessive options granting and excessive dilution in the past. So unless that went towards some really, really smart acquisitions and brought a lot of value to shareholders, it's something that's at least a little bit of a red flag. We look for, again, relative valuation. We're always trying to find hidden value. So, which is difficult to do in the uranium space because almost all of the companies are producing nothing. So how do you value a company that has and may never have cash flow? It's very difficult. You have to look at a bunch of different aspects. One of the things that we look at is like a very basic enterprise value to pounds in the ground. That's not a definitive thing to look at, but it's something it's at least some metric to make some kind of comparison to gauge rough valuation. And then insider ownership is huge. We love to see operators of the company that have been there for a while, that have done well in the past, and that own a big chunk of the current company. And if there's institutions that have been with the company, especially if there's institutions that own this company that have backed this team in a different project in the past, that's usually a really, really good sign because they're putting their money to back these people. And we always like to back people more than projects for the most part.
We're very aligned on that bullet point. Okay. Awesome. Justin, what can people find at uraniuminsider.com?
At our website, it's we have there's some links to previous media that I've done. There's a free newsletter that we put out called the Market Update Newsletter, and we put out an email every couple of weeks, just very basic email, just kind of keeping people updated on what's happening in the macro. And then we have a premium newsletter that's an annual membership, and that's we put out a monthly newsletter that's very, very in depth that goes out at the beginning of the month, and then a few bulletins throughout the month as needed as company updates for the companies that we follow. We have a focused list of companies, our investments we have 10 positions. We keep it to 10. Okay. That's what you get there. We've done pretty well. I think we're up about 285% since our inception, which is August 2019. And we're always trying to find hidden value for our members. It's been a good experience so far.
Okay, excellent. All right, look, thanks so much for coming on. It was great chatting with you and introducing you to our audience and picking your brain a little bit. Appreciate it.
Thanks a lot for having me, Jay. Really appreciate it. It's been a pleasure.
If you are just tuning in, this is the Nuclear Energy Investment Summit, and I am Jay Martin, an investor and the CEO of Cambridge House. What I do on this YouTube channel is sit down with investment gurus from all over the world so I can find the smartest home for my capital. And that's what we are doing today with a focus on the nuclear and uranium sector. I'm now joined by Jim Paterson, CEO of ValOre Metals, the sleeper in the uranium sector. Most people think of ValOre as a platinum company because that's where they've been spending a lot of their time. But I want to change your mind, and here's why. Enjoy.
What I love to do is introduce the right people to the right people, assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today. Please give my panel a round of applause. Welcome.
Okay guys, Jay Martin here, CEO of Cambridge House, and I am joined right now by Jim Paterson, the chairman and CEO of ValOre Metals Corp. Jim, how are you?
Hey Jay, pleasure to be here.
Yeah, I'm glad to have you on, and I'm excited to dive into this story with you and introduce you to my audience for anyone who's not familiar. You know, I'm very focused on the uranium sector right now. ValOre isn't the first name that probably comes to mind for a lot of investors when they're looking at uranium. And that's why I wanted to talk to you, because I think you're a bit of a sleeper in this space, and I'm excited to dive into why. But before we get into that, for anyone who's not familiar, Jim, could you just give us like the highlight reel of your background with Kaminak and Northern Empire and anything else you want to touch on?
Sure. ValOre is a member of Discovery Group, and Discovery Group is an alliance of public companies, and we have multiple public companies that sort of reside under our tent. We don't manage those companies, but we all have something in common. We have a common element that, for the most part, John Robbins, who's the rainmaker and founder of the group, is involved in many capacities with the companies in the group, and I'm involved to a lesser extent, but all the companies. And we support the companies as best we can by attracting really high quality technical people, corporate people to the group. We have existing relationships with bankers and financiers, service providers and contractors. So if a company joins Discovery Group, of which ValOre is a part, you're pretty much guaranteed to know that we have incredibly high technical standards, like from a geological perspective. We've got really high corporate governance standards, and we've got great relationships. And so the people are what make those relationships go. Great people attract capital, they attract great projects, and we've got a track record of success. So two of the names you mentioned there, Kaminak and Northern Empire, were case in point. You know, they certainly weren't walks in the park. They, you know, you kind of read the highlight reel. Kaminak was sold to Gold Corp for a little over $500 million for the Coffee Gold project, but that was an overnight success that took 11 years. You know, from project generator to a massive gold discovery in the Yukon to a very successful takeover by Gold Corp. And Northern Empire was some hard yards until a guy named Mike Allen joined as CEO, and Doug Hurst was involved as well as executive chair. But Mike had identified this asset in Nevada, and it was because he joined our group that we were able to raise the capital to make the acquisition from Imperial, and then quite quickly after acquiring Sterling, it was about 18 months later, the company was acquired by Coeur Mining for the project, for the Sterling project. So those are two sort of examples, but we're totally focused on building very strong boards, very strong management teams, maintaining the credibility in the investment community and the mining community. And we're always big shareholders in the deal, so we win when shareholders win.
Yeah, right. And that model is very familiar to my audience because, you know, we've had Cal Everett and Marco Day on several times, part of the Oxygen Group. And it's similar we talk about how beneficial having access to that infrastructure is for all the participating companies. Now, I know a lot of your time and energy at ValOre has been focused on your platinum projects. And maybe for that reason, I don't know, investors might overlook the uranium asset, the optionality that you have. So that's what I want to talk about today. So quickly walk us through, Jim, what are you holding on the uranium side?
The main asset is called Angelac, and it's a large property holding in Nunavut territory, almost 50,000 hectares. And we're the only group up there. We control basically the northern half of a basin, which is very similar but smaller. It's a sub-basin to something like the Athabasca. So it's in a different jurisdiction. It's in a territory called Nunavut, which is in northern Canada. But there's lots of similarities to the Athabasca Basin of Saskatchewan. And it is something that we've spent a lot of money on. We've invested over 55 million Canadian into the project since we acquired it. And that was after previous operators, we kind of guesstimate that they've spent about 20 million US prior to us. We struck the very first deal with an Inuit-owned company on Inuit-owned lands. And that deal was actually done between Kaminak Gold Corporation, which we just talked about, and Nunavut Tunngavik Inc., which is the Inuit-owned corporation that is the steward of their natural resources, the people of Nunavut's natural resources. So it was the first of its kind, and it's been a great relationship. They're an amazing group to be partnered with, and we've spent a significant amount of money drilling that off. We've done 3 different resource estimates and metallurgy. So, you know, many of the companies that we see out there that are operating the basin haven't actually drilled uranium yet. So, you know, we might want to check that out. But if they have 1 or 2 holes, but we've drilled, you know, close to 80 kilometers of drill core. So we've done a significant amount of work on it. And to be honest, what happened and why you haven't heard of us is because we continued on after Fukushima, pushing that project forward. And for example, 2012, we raised $22 million. We spent $20 million on the project in 1 year. We had 3 rigs rocking and a camp full of 60 people.
Right.
And our success with our news releases was met with violent liquidity, where people were taking advantage of the great drill results to basically sell their stock because the uranium spot price was sort of in a nosedive.
Yeah.
And there's only so many years that a person like me can tell people, you know what, the uranium price is going to move up next year, I promise, if it keeps going down. So we've had, as you kind of were talking about, we've had some real success in our group, and that's the beauty of having the group. We have some diversification in terms of experiences that we have. And we had a couple of deals where, we were able to, with other companies, we're able to acquire assets that were totally undervalued, that were totally unloved. The companies that owned them perhaps had given up on exploration, and we were able to get a great deal and take advantage of infrastructure and data and access and everything else. And so I looked to diversify out of the uranium space and was able to rename the company, roll it back. We did a rights offering to position everybody that had been a big supporter of the company for years past. And we acquired this palladium platinum project in northeastern Brazil called Pedra Branca. And so right now we're funded and we'll be working on that project. So we'll be adding value through exploration and discovery like we always do. And I guess the kind of point I want to leave, and we're not leaving yet, but what your viewers will be left with is that we have an amazing asset, but we have the optionality. When that price of uranium moves, that we all know it will, we'll get the huge uplift. But in the meantime, we can add value in a kind of a raging PGM market and take advantage of the fact that there's lots of capital available. And in fact, there's lots of suitors out there. If we do our job, I think we'll be able to be pretty commercial fairly quickly.
Yeah, 100%. Okay, now I usually don't pull up slides, but I want to in this case because I just want to give our viewers a sense of the scale of what you're working on. And so you shared 5 slides with me. I'll just pull them up, Jim, but starting with slide 2, just walk me through what we're looking at here and what my audience is looking at.
Okay, on slide 2, the blue box is our land package. So that if you see what it covers, the lighter sandy colored is the sandstone basin. So that would be like the Athabasca basin. This is a different basin in Nunavut territory. And that grayer rock will be like volcanic rock or country rock. And so these are important areas globally, generally for uranium exploration near sandstone basins with the unconformity between the sandstone and the country rock. And so what you're looking at, anything that's red on this map is high grade uranium. And just to give a sense of scale, if you look in the bottom, you can see a 10-kilometer scale bar. Yeah. So on the top right, you're looking at where the 5 zones that host the 43 million pounds are shown by those orange squiggles with the yellow outline. And then everything around them with a red star and a name is a zone that's been drilled by us, and we've hit uranium in drill core. So they're actually not just soil samples that are exciting. They're actually structures that we've drilled and hit uranium mineralization, but we haven't spent the money to march along that geophysical conductor to add it to the resource base yet. But we have 43 million pounds at 0.69%, which outside the Athabasca really is one of the highest, if not the highest grade resource globally. So it's quite significant. And then what the final thing on this slide that's of importance, if you run your eye way over to the left, you can see something called dipole. And we drilled that the last year we drilled up on the property, and we hit mineralization in structures that and nice grades that looked exactly like the stuff over on the right where we have the 43 million pounds. Yeah. And from a geophysical perspective, what we're thinking is there's all the pounds in the ground in this area that we call LAC 50 trend, almost 30 kilometers away. There's a mirror trend. So, and in between, you've got spectacular grades at places like Yat and Fort and Rib, which is in the bottom left. So it is really a district, and we control the entire thing. And we have this resource to start of 43 million pounds. We've done 3 resource estimates revisions to get to that number. Each year we go out and we drill. We generally add more pounds. We've done metallurgy. We've got nice recoveries there, high recovery rates and very low impurities, which is what you want. You want a potential yellow cake product that somebody will buy down the road. We've done all that work. So It is a sleeper in that way. This monster hides beneath in ValOre.
Yeah, love it. Okay, and then I want to jump to slide 4, the second visual that caught my eye. Just walk us through what we're looking at on this slide.
Yeah, it's a complicated one. It might be easier to point to these things, but on the left-hand side, you kind of see the same area, but we've pulled it apart and we have got 3 layers. So that bottom layer that's gray shows all the drilling that's been done, and the drilling has generated the resource. So if you look on the bottom one where the gray is and you see those purple blobs, yes, those are meant to represent where the 43-101 resource, the inferred resource is. So the 43 million pounds live in the western extension, the main zone, the eastern extension, and then over on the right, what we call J4 and Ray. And we have other images that kind of show what those look like. But for the most part, they're near surface or at surface, and they extend a couple hundred meters down below. And based on our drilling, we don't know actually how deep they go, but we've drilled down to a couple hundred meters. But the main thing is near surface, high-grade mineralization along that structure. And then that middle layer is just to show that's uranium in soils. So the one line that is the structure that hosts the 5 zones, the 43 million pounds, is represented by one little line on the middle tier. But everything else outside that is uranium. It's hot, and there's structures that are mineralized based on the soils. And it's completely outside the area of the resource. And, you know, we have drilled these other targets and we have hit uranium mineralization. So that would be like the pulse, the hot, the ML, blaze, spark, flare. These are all discoveries within a couple kilometers of our 43 million pounds. So there's massive upside even there. And then above the third tier, you've probably seen that if you've followed any uranium stocks in the basin or anywhere really, a huge help in terms of exploration. The technique would be just airborne geophysics or ground geophysics to look at these structures. And this is what they call old school VLF. It's just really rudimentary geophysics, and it totally helps these conductors stand out. And you can see these structures are pretty evident there. And for the most part, what we've seen on site is these structures are carrying uranium. And it's just a matter of finding those that where you'll hit something closer to surface. And I mean, of course, you want widths and maybe, you know, some structures coming together that you might get sort of a blob of uranium mineralization close to surface. So they're all juiced. And one of the problems is, I mean, we know we can add more, but it's kind of limitless in terms of the drilling that we can do. And at some point, there's kind of like, you know, there's a cost benefit to making more discoveries before you can actually determine how you're going to develop it. So at this stage, we're just at the exploration stage, but we're quite advanced versus most, and we're definitely got a district on our hands. Yeah,
100%. Well, compared to your exploration peers, you're significantly undervalued when you look at the size of your resource, which is why I wanted to pull you on and introduce this story to my audience. Now, you know, the most important question after we get through the deposit or before is skin in the game, right? I harp on this all day long on my channel. Whenever we have a CEO on or a money manager, you know, we're always diving into, have you written a check before I have? And so I know you were holding 19.999% of this company all through 2020. You've recently just completed an oversubscribed raise, and I believe maintained that position. So talk to us about your cap structure, Jim. Just give us any highlights.
Yeah, the market cap is roughly 30 million Canadian. I think right now, I mean, trades in and out. A little over 100 million shares outstanding. Insiders of the company own over 20%. And then the company called Jangada, which is the AIM-listed company that from which we acquired the PGM project, or the Palladium Platinum project. They've got a big position, a little over 15 million shares. So, you know, in terms of how tight it is, it's you know, there's a big retail component to it. This last financing, a few investors came in that were certainly interested in the palladium, but I think a lot of them were really interested in our uranium asset as well. So it's been a big change. That would not have happened 3-4 years ago.
Right.
But they kind of think, well, we get the best of both worlds here. We get the palladium asset, and then we get this uranium asset as well. So it's good optionality for them. But for the most part, there are no institutions that hold over 5%. But we've got lots of support. When this thing was really cranking in 2010, We've got big support by Ross Beatty's group. It was called Lumina Capital. And their involvement in the project, actually, we announced it and it helped drive institutional interest. And we were really covered by all the different uranium analysts in Canada. And this is pre-resource. We had a 90 million Canadian market cap on this company based on this project alone, pre-resource. But we were just pounding holes and coming back with these awesome news releases, of exploration results. And over time, frankly, a lot of the uranium analysts, it was tough for them at their firms to really stick it out. And we were doing less and less financing. So, we're sort of starting to really reestablish that now where we're getting great coverage. I think the institutional audience is certainly interested in uranium again. They were not for a long time. Yeah. And we got kind of get that double whammy where they really like PGMs and they get the uranium asset as well. But, I guess my whole thing, I've been in the business for 23 years now, and I kind of just learned over time that you can't chase the pricing of the commodities. I think you really have to focus on, is this a project that makes sense in highs and lows? And in the end, can we prove that this thing is worthy to be bought by a larger producer? Because we have found that is the best strategy for our shareholders and investors over the year to make money, where you find something which is a rough gem, you do really good work, you add a lot of value, and then you're able to transact with a larger firm that says, thank you very much for all you've done. We'd like it now, and your shareholders win. And we've done it enough times that, it's pretty addictive. So we want to do it more. And in this case, I think with this company, we want to do it a couple times.
I love that. Okay. Now we'll wrap it up. Just give me something to look forward to. Investors who are taking a look at the story, looking forward to news flow. What's on the calendar? What can we look forward to in the next 12 months, Jim?
Okay. Well, I can't promise a massive exploration program on a uranium asset in the next few months, but I can promise that we will put some serious horsepower into refining the story so it's very clear how we can set ourselves apart from others. There's lots of work that can be done from a digital or desktop perspective because we've spent so much money on it already. But in the near term, right now, we've just completed a financing. We've got over $5 million in the treasury to spend on a drill program that will start in the next month at our PGM project in Brazil. So while we wait for the uranium bull to really thrash its head, we can deliver outstanding exploration results from Brazil, which is, we're going to be rocking within 30 days. The drills will be turning.
Got it. Okay. Appreciate that. Look, Jim, it's been awesome having you on the show and chatting through the story. So I appreciate your time.
Thank you, Jay. An honor to be here. Thanks.
If you are just tuning in, this is the Nuclear Energy Investment Summit, and I am Jay Martin, an investor and the CEO of Cambridge House. What I do on this YouTube channel is sit down with investment gurus from all over the world so I can find the smartest home for my capital. And that's what we are doing today with a focus on the nuclear and uranium sector. I am now joined by Kristin Zaitz and Heather Hoff, co-founders of Mothers for Nuclear, engineers that are advocating for nuclear energy to be a key point in the conversation regarding renewable energy.
What I love to do is introduce the right people to the right people, assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today. Please give my panel a round of applause. Welcome.
All right, guys, Jay Martin here, CEO of Cambridge House, and I'm joined right now by Kristin Zaitz and Heather Hoff, the co-founders of Mothers for Nuclear. Really happy to have you on the show. Thanks so much for joining me.
Thank you. Yeah, we're happy to be here.
Hello.
So for anybody who's not familiar with Mothers for Nuclear, could you give us a quick background on the genesis of the organization? You guys were founded on Earth Day, which is fascinating. Just talk about why you founded Mothers for Nuclear and what your mission is, why you exist, and what you're setting out to do.
Yeah, we both started out being skeptical of nuclear energy. It seemed like something environmentalists shouldn't support. And we both went to college in San Luis Obispo, California, where there's a nuclear power plant nearby. After college, we happened to get jobs working there and were able to ask a lot of questions and started realizing how important nuclear is as a clean energy source. And then after that, we started realizing that existing nuclear plants were under threat around the country and world of shutting down early. So we started Mothers for Nuclear to help spread awareness about the need for nuclear energy along with other clean energy sources, and to help try and help moms and women feel more comfortable with something that might feel a little bit intimidating at first.
Right. I mean, that's really why I wanted to connect with you, because as I shared, my audience were retail investors. They're just like me. We're just looking for smart homes for capital. And in order to find a smart home for capital, you have to tick a few boxes. When it comes to a company, you want to find great management and a good product and, all the right infrastructure. But, you also have to identify the macro trends. Is there a tailwind or a headwind supporting this trend? And right now there's a ton of interest in the uranium sector. We're receiving a surge of requests from our investor base for more information and more opportunities in the investment space. So when I read your story about, it was a pivot, because I think both of you came from a place of being a bit unsure about the environmental implications of nuclear. You changed your thinking. That inspired you to start Mothers for Nuclear. And now you're driving this narrative, trying to educate people about the importance of nuclear as a renewable energy. Am I on the mark there?
Well, nuclear energy is one of the world's largest clean energy sources. And one of the great things about it is that it's not limited, like where you install it. It isn't limited by how much sun shines there, how much wind blows there, how much water is available. Those are big limiting factors. So nuclear plants, they can be installed in various places all around the world, and they can provide low carbon energy to those places. And the climate conversation is growing and growing and growing, and it's becoming more and more bipartisan. So, and especially with younger audiences. So we're getting a lot more broad agreement with younger audiences that climate is a real issue and one of the top issues we as a world should be addressing. And since nuclear is such a great way to provide a lot of low carbon energy to a lot of people, it's more and more in the conversation.
So thank you. So it might be an obvious question, but because we could point to, the few situations that I guess opposition likes to point to, like Fukushima, for example. But, the obstacle to wider nuclear adoption is not technological, right? It's not economics, right? It's policy for the most part. Is that correct?
Yeah, we agree with that. And it's interesting, you mentioned some of those high-profile events, 3 Mile Island and then Chernobyl, and more recently Fukushima. So we've definitely seen, a lot of interest in nuclear kind of building, and then something happens and people get scared. And then we see it building again, and then something happens. And I'd like to say that nothing else is ever going to happen again, but we'll see. After Fukushima, I think there was a lot of eyes opened to the fact that lots of what we encountered in terms of negative impacts was self-induced. No one was really injured by anything that happened at the plant, but people were injured and killed during evacuation. And I think any events in the future can be closely managed in a way that we don't have to be scared of.
Now, can you talk to me about that? And can you talk to me about any improvements and evolutions of the energy source itself and the technology itself, and how things changed in the last decade or so?
Our industry is really good at learning from itself. We share information amongst all the different plants and all the different companies in a very open fashion. And I would like to say that we don't make the same mistake twice ever, but we're a learning organization, and there's a lot of focus on nuclear. If someone gets a paper cut at the plant, it could make the news because someone's hurt.
Tons of
so, yeah, we have a lot of attention on our performance, and as a result, we have really high performance.
So give me the high level pitch then. Why should nuclear be included in the renewable energy conversation?
Well, as Kristin said, nuclear is the largest source of clean energy that we currently have. And it's a big, step backwards if we lose that existing generation and have to fill all that in with renewables before we can even make progress. And I think it also shows, countries that have succeeded in lowering their emissions, like France and Canada, have largely done it with a combination of hydro and nuclear. And I just think it's such a big part of how we decarbonize that you have to consider it along with renewables.
Right. Now, question for you. Do you think that part of the opposition to nuclear is why we still utilize coal to the degree that we do?
Yeah, absolutely. I think that opposition to nuclear has really long and deep roots in our history. I mean, what I knew about nuclear growing up, I just turned 40 this year, so that'll give you a little bit of a benchmark. But, I grew up on The Simpsons and I saw Homer in the control room, right? And that's what a lot of people, in my generation knew about nuclear. Now, my parents' generation, what they knew about nuclear was hiding under desks at school. And, each generation has their nuclear story that's influenced most of the time, not necessarily by the science, but by emotion. And so what Heather and I are doing with Mothers for Nuclear is using emotion to communicate to people. We're also trained engineers and we know the science behind nuclear, but we see that people don't care about the science unless you first, identify with them on what they care about and reach out to them, using your emotion.
Yeah, I love that. Well, the story, that narrative drives sentiment, right? And it's comical, but you're right. I'm 36. I grew up Sunday evenings watching The Simpsons, and that was my perception of a nuclear power plant, right? It's not a good one, right? But and it's silly, but it's how we craft ideas in our mind, right? It's what we receive via media, whether it's cartoons or the news. What I would love you to touch on is, the one maybe item that people keep on coming back to when I talk about nuclear, if they're opposed, it's the spent rod storage, right? Well, what do you do with the spent rods? We don't know what to do yet, right? But just first of all, give me your thoughts. When somebody comes to you with that, Kristin, what do you say in response?
I would say that was my last and biggest hang up also. So, when Heather and I respond to a lot of things, we like to validate people's feelings because people do have valid feelings about nuclear and often strong feelings. And, both Heather and I caring deeply about the environment and growing up recycling everything. I have some feelings on spent nuclear fuel and what we do with it, with that background in mind. It's incredibly valuable material. It's actually kind of boring material too. It's a solid. And it just sits there. So The Simpsons taught me that it's green and oozing and coming out of barrels, but it's actually not. So it's solid little ceramic pellets. And from a nuclear power station, they put those pellets in a long rod that's all encased in a cladding. And all of those are together and they stick them in dry fuel storage after they've cooled for a while after getting out of the nuclear reactor. And this dry storage, the rods just sit there. There's no active mechanical or electrical systems that are needed to keep that fuel safe. I don't have much else to say about it to make it sound exciting. It's not exciting. But the exciting thing about it to me, as someone who loves recycling, is the value of that material. It's highly radioactive, but it can be recycled, and it is recycled in different areas around the world, and they're able to reuse that material. So instead of mining new material, they can reuse that and use it in new reactors, or at least, minimize the waste product so that it's a much smaller amount and it's highly radioactive for a lot less time.
Okay. The recycling angle is fascinating. And then for the waste, what's currently done right now to store spent rods?
So they're sitting in the United States, they're sitting in dry fuel storage, like I just described, at the individual sites around the country. And every country does this a bit different. Finland is opening a long-term geological repository. France reprocesses or recycles their spent nuclear fuel. So there's lots of options. And the thing that Heather and I are both excited about with the spent fuel conversation is there's so many options. It's not a lack of technical possibilities for what we do with spent fuel in the future. It's a lack of political will to do something about it. So that's something we can overcome as a society. It's a lot harder to solve a problem. Think of the COVID crisis, when scientists and the medical community didn't have an answer to, how do we develop a vaccine? And they didn't have an option, and they didn't have an option for therapeutic treatments, right? There was a lot more despair and hopelessness. But once we learned more and we had options, then there's smaller problems we have to overcome, like distributing a vaccine or reducing the cost of therapeutic treatments. Those are things we can overcome as a society. We know how to do that.
Got it. Okay. Now, can you give me some sense, if if we were talking about the total mass of spent rods today, what kind of scale are we talking about? And I asked because I had a conversation with this gentleman, Warren Irwin, who's the founder of Rosseau Asset Management. And he told me that the total amount of spent rods would take up the space of one football field 10 feet high. And that's it. Is that accurate? Does that sound accurate?
I think it was more on the order of meters. But still, when you think about how small a football field is compared to just a landfill for a city, that's pretty amazing that it's so small and that it generated so much clean power. When we respond to questions about used fuel now, we have to be careful because I could almost be dismissive, because I've learned so much that it's really not that big of a deal. Like, there's so many reasons that nuclear is so important that, the issue of waste is just a really tiny little thing. And the biggest thing about it is the public perception. And what Kristin was talking about, we know what to do with it. We just have to decide to do it.
Right. Yeah. It just shocked me, actually, to be honest, the scale at how small it was. And I guess you're right. I don't want to be dismissive either, but I don't know why I would have had a much larger footprint in my brain if I just had to guess prior to that conversation. But
lots of anti-nuclear people like to talk about the mass of the used fuel. And you mentioned that when you first asked about it, and then you went to volume. So it is pretty heavy. It's very dense and concentrated, and it's in, heavy canisters. So, talking about the mass of the used fuel can sound rather intimidating, but it's actually really small.
Thank you for making that distinction. Yes. Yeah. Okay. Very cool. Okay. Look, if people want to learn more about Mothers for Nuclear, where can we find you?
You can find us on our website. At mothersfornuclear.org. And we're also on social media. We have Facebook, Twitter, and Instagram. And you can also email us, info@mothersfornuclear.org.
That's what we did. Okay. Excellent. Hey, thanks so much for joining me, coming on the show. And I really appreciate your time.
Thank you.
We're really excited about the future of nuclear. So thanks for having us.
Thank you for tuning in today. I hope you enjoyed this. We produce about 4 interviews per week. So if you want to see more, click subscribe, turn on notifications, and I'll see you here.